Good evening, good afternoon, or good morning. We would like to present to you Lesson 5 of Consulting for Equity. And before I do that, I would like to let you know that this is for review, informational, and educational purposes. With that said, let's get into the lesson. Now, as I mentioned, this is about escaping the time for money trap. That is, when you work a job, you're trading time for money. That is the economics of it. Is also the business of it. Now, remember, as I said before, you're trading dollars for your hours of time. The challenge with this is you can't scale. You can't add more hours to your day or more weeks to the year. Eventually, you run out of time because there's only so much of you that's available. And when you do, the paycheck stops, or the earning stops. This put the earning stops. Okay, now as you fix stuff, let's say sucky stuff, uh, broken stuff, whatever. So you fix stuff, and give them your strategies and frameworks. You help them to grow. When you're paid up front, you're paid for your time, but not for your skills. So this is kind of the point. Trade it for a future and trade it for wealth. So what you want to be doing is you want to trade your skills for a future which is based upon building wealth. Okay, now let's go into further detail about this. Let's talk about this in greater detail. Now, plan to find the money that is right in front of your face. Sounds sort of a strange thing to say, right? Well, that dollar sign can be right in front of your face, but if you don't have the right resources and plan in place, you're going to be blind to how you can earn it. It almost sounds rhyming, but it's true. Okay. Now, here's what you're aiming for, okay? You're charging based upon the value you deliver. Okay? This is the point we're trying to make. You want to be consulting for equity, not dollars. Consulting for equity. How do you do that? You're charging based upon the value you deliver. Okay? In this case, the more that we talk to the company, the more we bought. The more we bought into the idea. We knew that their event plan would work. I knew we could help. We felt like we could provide transformational value. We could create a really successful event. I don't really want to say felt, we thought. We need to be confident and sure of what we think. So that's more like we thought like. Our assessment was. Now, here's the difference. First, you can charge for your skills. And charging for your skills for equity versus if getting a cash payment up front for their event plus 25% equity in the company for a pre-event consulting package. So you notice the difference is time for money versus some money up front but a 25% equity in the company. Okay? This is what we're doing. 25% equity in the company. Okay? Now, what we really want to be doing from a strategic standpoint is we want to be selling transformation. What does that include? Well, you're not selling consulting services, you're selling transformation. Now, the transformative value can 10x or more their investment. You're not selling a few hours of advice or a framework or even coaching, you're selling transformation. It's a big point to make. So why does it work? Because your transformative value can 10x or more their investment. So when they pay for your service, it's not just about, it's not just about time for money, payment for services, but it's an investment. It's going to pay off for later. Another way to look at it for you to understand it is that consulting for equity can be your number one passive revenue source. Why? You've done an initial service. You may or may not collect some money up front. But what you're going to get is you're going to get more, you're going to get a certain, depending on the agreement, you're going to get a certain equity above baseline, meaning above what they're already making. So if it's the same as what they're already making, well, 10% of increase of 0 is still 0. Point is to increase their revenue, not to keep it the same. Understand? Okay, now what we need to consider is the price of equity versus dollars. Now there is some math involved in figuring out how much equity to charge and how much the value you're providing is worth. What you want to do is start with a baseline. Well, baseline is a starting point. Now the starting point would be, where are you now? Just like a start of a race. Where do you start off with? You're going to start with a baseline. How we're going to do it is you're going to basically take with 10% of your increased profits. Okay. You could earn nothing, but if you're able to get 10x, you can earn as much more per quarter. Now you understand that the team was able to do the hours, but was also able to oversee and advise. Okay, so this is the other benefit that you can bring. What they end up doing, as one example, was you could negotiate 25% equity for yourself as a consultant. Okay. Then, in addition to equity for each team member, they all got a piece of the equity as well, which they were super happy about, of course, but also got passive perpetual income. Okay. So, for the SOPs, that's a standard operating procedure, and strategies have already been developed. We're basically going to work on the base of operations, or otherwise known as, we're going to talk about operations, day-to-day operations. You might have also heard the term COO, the acronym COO, which is, that would be the Operations Officer, Chief Operations Officer, COO. Now, what you really want to do is you want to be consulting for equity as a business model. You want to make it a business model, as in what your business is made around. You have the strategies, frameworks, plans, solutions, and advice that can 10x or more your clients' businesses. They will scale, grow, and make more money when they work with you. This is the point. They want to scale, grow, and make more money. That is why they're willing to hire you as a consultant and work on equity. These dollars start to multiply. So then when you see that, you would immediately ask yourself the question, would you rather be paid a flat rate or a little piece of the pie? And if you're producing results, you want to get a little piece of the pie, which is a percentage of the amount. And now hopefully you can understand what consulting or equity really is you're going to make it part of your business model. Okay. Depending on the situation, you could ask for a little bit up front. Okay. Maybe to cover operating expenses or something like that. But long term, that's when you get your equity. Okay. So there are various ways to negotiate a deal, but basically your two main options is either you get some money up front and get equity, or you just get all equity. So you have to decide that. Remember equity as the business model. Okay. Hopefully that becomes clear about that and you're able to scale that because the whole point of the business is scaling, making a larger and larger amount. Okay. On a larger and larger basis. All right. I'd like to end the lesson with thanking you for taking the time to watch this video, as you could be watching any other business video, but you're watching this one, so I certainly appreciate it. And where this did provide value for you, what I'd like you to do is please click like on the video. That way you'll be pushing the algorithm, more people will be able to view it and enjoy it. If you haven't already, please click the subscribe button. That way you'll have access to all the content on my channel, as I do have a variety of content and subject matter on this channel for you to enjoy and benefit from. Also, if you haven't already, please click the bell button. That way you'll be notified of all my future videos, such as when my new videos come out, you'll be notified accordingly. So I'd like to wish you a great day wherever you are in the world.